will go up, 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 up. And then market sometimes will go down again. Okay, so market, right, they got this, we call it the stages. Okay, they got how many stage? They got 4 stage. Okay, 4 stage. So stage 4 is here, down. Stage 1 is here, up. Okay, when it turn up. Stage 2 is here, right, when it's going up. And then stage 3 is when it is turning down. Okay, so 1, 2, 3, 4. Okay, 1, 2, 3, 4. So, okay, so the question here is, which stage are we in? Okay, which stage are we in? Okay, but quite surprised that today nobody typed SGX. Okay, nobody typed SGX. Okay, so very interesting. Okay, let's go through this. Okay, let's go through this. Okay, so example, right? For me, okay, I want to know like what is happening in the US market. So let's say US market. Okay, I will do this all US market, and then I will scan. Okay, I will do a scan. So the scan, okay, I will do like let's say stage 1 or stage 2 or stage 3 or stage 4, right? So from here, right, I will select, okay, which one first? Okay, is it stage 1? Okay, stage 1 means stocks are turning up. Okay, stocks are turning up. Okay, is it all the stock is important? No, okay, not all the stocks important. Okay, the important one are the one that is heavily traded. Okay, heavily traded. So example, okay, you can see that SQQQ is in the stage 1. Okay, what does it mean? What does it mean? It means there is a potential that this will escalate and go into stage 2. But so far it doesn't. It doesn't look like it is going up. Okay, so Verizon. Okay, Verizon, is it an important stock? Not that important, because this is a very defensive sector. Okay, defensive sector. Pfizer, okay, Pfizer also a defensive sector. Healthcare is a defensive sector. Okay, so you can see that all these stocks, right, they are the not important one. Okay, not important one. What does it mean? Where is the important? Important one is not here. Okay, important is not here. So where are the more important stocks? Where are the Tesla? Where are the Meta? Where are the Google? Where are the Apple? Where are the NVDA? Okay, so that is the more important one, because those stocks are the key market, okay, stocks, right? The core market stocks. So over here, the market, is it on stage 1? I would say it's not, because of all this stock is not the most popular one. Okay, not the most popular one. And okay, and they are also not the most like aggressive one. Okay, not the most aggressive one. So let's take a look at stage 4. Okay, let's do that, stage 4. Okay, are there stocks in stage 4 that is very important? Okay, are there stocks in stage 4 that is very important? Which one? Okay, which one is the very important one? What do you think? Let me know in the chat. Which one do you see from here, number 1 to number 20? Which one you know one? Hey, this stock I know, I saw before. Which one you see? Wow, this stock I'm very familiar one. Not say very familiar. I trade before. Which one? Okay, so you can see now, Apple. Apple is in stage 4. Okay, Apple is in stage 4. Okay, so good news is yesterday is up. Okay, yesterday is up. Okay, but if any case, right, Apple were to be better, right, they must go into stage 1. But so far, has it been to stage 1 already? Not yet. Need a little bit more time. Okay, need a little bit more time. So you can see Microsoft. Okay, Microsoft is in stage 4. Okay, what does it mean? It means any time if it start to turn down, right? Okay, any time if it start to turn down, if it start to break any low, right, like this support level or break this support level, right, that means wow, this market dangerous. Okay, dangerous. Why? Because the one that is good one is in the blue color. The one it is not so good one is actually the red color. Okay, so the red color, sometimes they can go lower. Okay, but if it's just a small correction, okay, it can turn back to blue. That's a stage 1, and then you can go back to stage 2. Okay, then so right now, question is, are we out of the woods already? Okay, not really, but there is a chance that it can continue to go up and continue to go into stage 1. So AMD is also one of the weak one. Okay, very weak one. So these three, Apple, Microsoft, AMD, still pretty weak. and this Salesforce, CRM, ARKK, Nike, okay, Disney. Disney is the weakest of all, right? TSM, this is also one of the stock that is not very strong, over the last 2-3 months. Okay, so from here, right? Okay, the best one will be in the stage 2. Okay, the best one will be in the stage 2. So the best stocks, okay, who is the best stocks and also the most popular will be NVDA. Okay, the best stock will be NVDA. So NVIDIA is one of the best blue chip right now, okay, right now. And Google, okay, Alphabet is one of the best blue chip right now. And then, this Oracle, also one of the best. And then Adobe, also one of the best. Why? Why is it like that? Why? Why I say this is one of the best? Okay, let me explain this. Okay, so over here, you got different stages. These different stages, right? We identify it as the so-called the market. Okay, market. So when we want to buy the stock, right? Okay, we want to stay with the. We want to see whether the market is it good or not. Is it good or not? If it's good, right? Then the stage 2 will have more stocks. Example, here is a 700. Here is 300. You understand? So if 700 is here, 300 is there, that means the market is very good. Okay, market is very good. Correct. However, if it is 900, okay, 900 stocks is falling, 100 stock going up, that means the market not so good. Market is not so good. Overall, a lot of stocks is, very weak. Okay, very weak. So just now, right, I talked about this. Okay, I say that, NVIDIA is one of the best. NVIDIA is one of the best. And this Google is one of the best. Okay, so how do you know it's the best? How do you know it's the best? Okay, so in the market, right, there is a limited number of shares. Okay, limited number of shares. Okay, so if you go read my book, you can read my book. The chapter number 1. Okay, chapter number 1, right, we talk about this thing called 90-10 rule. You know why I write this as chapter number 1? You know why? Okay, because if you randomly buy a stock in the market, okay, your chances of losing money is very high. Why? Because in the market, 90% of the stock, right, are lousy stocks. Okay, 90% of stocks are lousy. Lousy stock means you lose money on. Okay, how to lose money? Go downtrend. 90% of the stocks include the sideways one, also lousy. Also lousy. Correct enough. If it's good, then you make money area. So the one that make money is the 10%. The 10% are the one that is going, we call it the uptrend. The uptrend. So generally, like if you randomly pick stocks in the market, your chance of losing money is 90%. Why? Because if 90% of the stock is good, right, then everybody make money already. Understand? Agree? Agree, type yes. Okay, agree, type yes. Agree? Okay, if 90% of the stock is good, then anyhow pick, everybody make money already. Correct? So the reason why people don't make money in the market, what's the reason? It's because 90% of the stocks is what kind of stocks? Is lousy stock. Agree? Okay, so over here, we want to choose the 10%. We want to focus on this list. You understand? So that means you want to have a binoculars. Okay, binoculars. You want to spotlight, okay, spotlight this okay, this what we call, spotlight this 10%. And you want to choose from 10% here. Choose from 10%. So what is it? What's the meaning of this 10%? That means here we look at the top 20 stocks. Okay, 20 stocks. Correct. And then we choose 5 to 7 stocks, example. Okay, so which one is easier? You choose from 1,000, you choose 5, or you choose from 20, you choose 5. Okay, think about this, correct? So a lot of people, right, they choose from 1,000. Wow, so they choose wow, today I should buy Comfort Delgro, or I should buy YangZiJiang, or should I buy OCBC, or should buy Food Empire. Okay, so a lot of people they always thinking, well, what I should buy today. Okay, but what is the criteria? What is the criteria that you focus on, right? So we say, okay, I want to focus on stock, right? That is which stages? Okay, I want to focus stock that is, I say, I want to focus stock that is after I buy, got better chance to go up one. Okay, after I buy, got better chance to go up one, right? Is actually the stage 1 and the stage 2. The stage 1 and the stage 2. If you buy stocks at stage 3, there is a chance, of course, they might rebound and then they go higher. They also have a chance that they start to crash. Okay, they also have a chance. Okay, so it depends. It depends where the market is heading, where the market is heading. Okay, so over here, okay, I say, okay, we will focus on stage 1 or stage 2, or sometimes stage 3, depending on situation, but we don't want to focus on stage 4. Agree? So you do this, right? Okay, and then after that, okay, what I do is I can do this. I can scan, like, let's say example Singapore. Okay, let's say Singapore, SGX, SGX. Okay, and then I rank. I do some ranking. I want stocks with a smart money one. Okay, I will have some stock with smart money. So some of these stocks, they have some smart money. Okay, have some smart money. Oh, smart money is in this blue color. Smart money is in, right? Some of these stocks, ST Engineering, they got smart money on. Okay, smart money is in. Oh, that means, oh, this recently, wow, like quite okay leh. Okay, so you can see, oh, YangZiJiang, wow, smart money is steady. So this one, right, is we can choose. Okay, I want stocks with smart money. Okay, with smart money. So we got smart money one, actually is more, like like uh like more steady lah. Okay, more steady lah. Okay, so at least you know that you are not alone lah inside. Okay, smart money is in, right? So some, okay, some they don't have, right? Some of course they don't have smart money. Some, we can rank based on power. I want to have the most powerful trend. So most of the time, right, I rank based on the most powerful trend, like power. So in this case, right, for Singapore, okay, only got one stock that is qualified. Guess which one is the stock? Okay, which stock is the best? Okay, the best qualified one. Which one? Which one? That is YangZiJiang. Okay, there's YangZiJiang. So the idea here is this. Okay, the idea is there is so many stock in the market. Buy which stock you can have a chance to make money. Okay, and then this money, right, is significant one, right? It's important one, right? So for us, we say that, okay, you want to choose this thing called the best. Okay, best. The best stocks in the entire market. So in this analysis, we find that, okay, YangZiJiang is the best. Okay, so the question is, can I buy now or not? Can I buy now or not? Can I buy tomorrow or not? A lot of people will ask this question. Can I buy or not? Okay, so over here, this is a valid question. Ultimately, you want to know whether can buy or not. Okay, so the place that you buy best is when there is this blue arrow. So blue arrow, okay, is haven't go up yet, not yet up. If without blue arrow, maybe it's up already. If no, like haven't moved, okay, blue arrow is haven't moved, not yet moved. If it go up, means go up already here, it go up already. So when there's a blue arrow, right, okay, it shows that, okay, this is not yet really moved, still can, potential. Okay, but if it run up 3-4 days, maybe a bit late already. You understand? So we want to be on time. We want to be on this like blue arrow place, so that you get in on time. You're getting on time. Understand? Okay, so same thing over here. Okay, over here. Just now we talk about US market. So let me just go back with you. Okay, go to the US market and show you what is happening here. Okay, what is happening here? So for US market, right, of course, you can rank it up, and then you can get some of these stocks. Like example, this Miniso is one of the best stocks right now. Okay, one of the best stocks of the year, one of the best stocks right now. This NVDA 1.5 times one, okay, one of the strongest uptrend right now. Okay, and then like Elf Beauty, also one of the best uptrend right now. Okay, one of the best uptrend right now. Okay, so these are the things that we say that we say that this data, right, is definitely the real thing that is happening in the market. Okay, so a lot of people say, the market, right, cannot make money. It cannot make money. Okay, actually, if you are looking at some of these stocks, right, it's not that the overall market cannot make money. It's actually, did you land on this stock? Did you get into this stock? So if you can get onto some of these stocks, right, then it increase your chances of making money. Okay, so some of these like VRT, right, this stock is very strong right now. Okay, but are they the mainstream kind of stocks or not? They are not. They are not. So the one that is the strongest and the one that is more mainstream one is NVIDIA, and then the one that with power one, if you see NVIDIA, the power, right, is 200 something. Then the rest, right, the power is very slow. Okay, very slow. So if you look at some Oracle, will be slightly better, and then you look at this Eli Lilly is also slightly faster, very faster. So with the power, right, it shows you that whether the trend is fast enough or not. So like Applied Material, okay, is power is 57. So that means this stock, right, is actually quite steady uptrend, very strong correction, never really drop. Also, the power is quite okay lah. Okay, not the very very fast kind, but it's like you're driving 50 something lah, 50 something kilometer per hour lah. Understand lah? Okay, so that explains, okay, the power. And this is SMI 21 means the smart money is around at 21% here, smart money. Okay, and another indicator that I created is this RKT. Okay, RKT, right, represent whether these stocks will rocket or not. Okay, will rocket or not. So some stocks, right, they are very very crazy. Okay, so the RKT can be a very very big number. Okay, very very big number. So example like this Tasha. Okay, Tasha. So Tasha yesterday up like big percentage, like 42% last night. Okay, so the RKT, right, is 16. So some stocks, okay, right, they are very very volatile. So they have this rocket factor. Okay, rocket factor. So stocks like example this Kavana. Okay, the rocket factor, right, is 9.7. So it's actually telling you that, wow, this stock, right, if go up, it can go up very very fast. It's a rocket kind of stock. Okay, so of course we want to balance, right? Some people, they say, hey, this kind of stock I don't like one. I like the slow and steady one. Okay, slow and steady one. So if you look at like some stocks like slower one. Okay, some slow stocks like let's say Walmart. Okay, Walmart. Okay, so Walmart is a very slow stocks. Okay, very slow. 1.3. 1.3. The power also not fantastic. The rocket factor 1.3, like grandmother walking at, right? Grandmother walking. So over here, we need to know our numbers. Okay, we want to know what is suitable for ourselves, and then when we choose, right, we can choose the right stocks. Okay, we choose the right stocks. So over here, that is the how we look out for stocks. Okay, so typically we can rank it up, power, and then from here we can see what kind of stocks that is suitable for us. So in this case, NVIDIA is here. NVIDIA definitely is one of the stocks. ELF is one of the stocks, and then the rest, it depends. Okay, sometimes you look at this value, right? Big number, right? Also more confident. Okay, like VRT. So VRT is important. NVIDIA is important. ELF is important. and then Fastly. Okay, Fastly is also one of the important stocks. Okay, one of the important stocks. Understand? Okay, so over here, that okay, so you can see here we have this 20 stocks, right? This one, right, actually is our watch list. Okay, watch list. So the question here is, do you have a strategy to help you to build watch list? Do you have a strategy to help you to build watch list? So my strategy is this. I'm showing you my strategy. My strategy is I use the scanner and then I screen example stage 2 and then I rank it up with the power. This is one way. Okay, this is one way. Another way is this thing called historical high. Okay, which I can find stocks that is right now breaking into their historical high, which means they are uptrend, and I rank it up with the power and see which one is faster one, like the power, what powerful one. Okay, so from here, there is again coming out. There is a Abercrombie, there's a NVDA, there's ELF, there's a ENOT, okay, and then MOD, VRT, VIS. One of the stock that I hold on is this VIS. Okay, so we look out for stocks, right? It's steady uptrend kind of stocks. Okay, so from here, right, from here, you can find out more stocks. Like some of these maybe you didn't know. Oh, actually, Caterpillar. Okay, Caterpillar is one of the stocks that is on the uptrend. Caterpillar have a bottom signal recently. Caterpillar last night actually also performed quite well. So actually, is this a valid stocks or not? Is this stocks performing better than the market? Because not many stocks, right? Not many stocks break their 2021 high. But Caterpillar at this moment already break their all-time high, over the years. Oh, hey, then maybe this is a good company. Maybe this is a steady company that that is very consistent in terms of the movement, right? And recently market correction also never really dropped. That means if market were to correct further, right, maybe this is not the one that dropped the fastest. Okay, you understand what I mean? Understand what I mean? So from here, right, you can usually we focus on top 20. Okay, usually we focus on top 20. So top 20, like recently I bought this Jabil. Okay, so the earnings good. So there was a earnings entry. Okay, so got in at a good price, and with a very small stop loss. And why I have the confidence to get this? Okay, the reason is because I've seen this stock before. Before it went down, I've seen this stock that is very steady uptrend. Okay, very steady uptrend, and then continue to move higher and higher and higher. So Jabil, okay, is one of the stocks. So again, there are many stocks. Right? There are many stocks. So do you know that Dell is also doing well right now? The market correction, right? Dell never drop. Market correction, but Dell never drop. Okay. So from here, right, you can find out. Oh, actually, there are quite many stocks that is standby. Okay, standby to move higher, and from there another stocks like PWR, Quanta Service. Okay, have you ever seen a stock like this? Steady uptrend, and then if you zoom out, over the past few years, it have always been this steady uptrend. Okay, so that is the thing here. That is the thing here. So you can find out. Oh, actually, from here there's this 20 stocks, right? From these 20 stocks, and which one is more suitable for you? Which one is more suitable for you? So maybe you reduce to 10 stocks. Okay, reduce to 10 stocks. And you can choose these 10 stocks because if the stock is really, really good, okay, it should be in this list. It should be in this list. So I will always rank it with the top 10. Okay, rank it with the top 10. Okay. So top 10, top 20. Okay, top 10, top 20. So there is many, quite many of these stocks. Like yesterday, this OC also did quite well. Okay, have a good move, 2.6%. And before that, it was also a very steady uptrend. All right, so that is the thing here. Okay, can you do this with Hong Kong? Okay, Hong Kong. So some of you do Hong Kong, right? Let me just quickly go through with you. Okay, so let's say if you move it to Hong Kong HKSE. Okay, I think not many If not many, right, means the market is terrible. Okay, the market is terrible. So first of all, we in Hong Kong, right, we try to avoid those very, very lousy one. Okay, so anyway, Hong Kong only got 20 here. Only got 20. Some of these, right, the value is very small. Okay, this value, okay, usually, let me share with you. Usually, you look at this, then you say, okay, which one you don't want to see? Okay, I don't want to see like Warren or this Warren, I don't want to see. Okay, so value is what? 7 million. Okay, Anhui Express, maybe I can accept this. So I will put a filter on the value. Okay, so Hong Kong, let's say 7 million. I will click save. So actually, how many stocks is can watch one? Okay, in Hong Kong, 10. Okay, 10 for using this scanner. Okay, using this scanner. So with this, you got this CNOC. Is it an uptrend stocks? Yes. Is this a good entry point? Now not, but here actually there's a good entry point. Here there's a good entry point. Bottom signal here, there's a good entry point. Okay, so trip.com. Okay, trip.com. Miniso. Yeah, Miniso is the same one, right? Hisense. Okay, Hisense. So Hisense, if it turns to blue, okay, if it turns to blue, then maybe there's a good signal for entry. So Hisense is one of the stocks to watch. Okay, and Xiaomi, okay, Xiaomi. Oh, this is Warren. Okay, so we don't care about the Warren. Okay, Anhui Expressway, not that fantastic. Okay, so the reason why is it like that is because this overall, right, this whole market, right, is not fantastic. Okay, so this whole market, this what we call the Hong Kong market, right, is terrible. It's terrible. It's in a bearish market. So if you ask me, I will look at CNOC, I will look at Hisense, these two. The rest, no need to see. Okay, so of course, there's other strategy. There's more, give you more opportunity. So if you want to have more opportunity, you can scan with this, so it will show you some of these stocks that is not that uptrend, but they could be explosive when they move. Okay, so BYD Electronic, this is the one, right? So if you're trading Hong Kong stocks, BYD Electronic is one of them. And then this East Buy, there's a potential. So if it rally like this, it's 1,800%. So right now, is it trying to do another round of this rally? Like, is it possible for it to rally again from here? Okay, so PopMart also are the stock that is we call it the explosive kind of stocks. So these are some of the new scanner. Okay, new scanner. Explosive bullish candle is a new scanner. Fast mover is a new scanner. Okay, but this fast mover is usually used on the US stocks. Okay, so that you can find the fastest uptrend. Okay, the fastest uptrend. Why? Why is it important? Why is it important? Because if one of the two problem that everybody have, right, is this. Number one is they say market cannot make money. Okay, this is one of the problem. Economy not good. Okay, so market cannot make money, economy not good. These are the number one thing to, number one toxic that actually that tells you all the time. Okay, it tells you all the time. So to prove that whether the market can make money or not, we use what? We use the scanner to tell us. So if the fast mover got many stocks, right? Okay, that means what? got stock go up or not? Yes. So these are the sum of the stocks go up. These are some of the stock that went up. These are some of the stock that went up, take a break, and then went up again. These are some of the stocks that went up. Okay, so the question is, did you see before or not? Did you happen to see this stock before? If you never see these stocks, you will not buy. You understand? Okay, you never see this stock, you will not buy. Okay, so the second thing is, okay, the second problem is this. Okay, it's risky. Okay, risky. Okay, it's very risky. Okay, so the second problem, right, is this risky. Okay, risky. Okay, so how to minimize the risk? How to minimize the risk? Okay, so let me just share with you this thing. Okay, share with you this thing. So let's say this is like me, right? Okay, me. Last time, okay, I always see this two things. Okay, so let's say one is safe. Okay, one is safe. Okay, one is risky. Right, one is risk. I always look out for safe. Okay, I always look out for safe. Risky, we don't want. Risk, we don't want. Risk, we don't want. Okay, we always want what? We always want to be safe. Okay, we want to be safe. Okay, so you think about this. In the market, is it most people like this? Agree or not? Most people, if you ask me risky, safe, they go for safe one. Okay, but does it make money? Does it make money? Not really, right? Not really. Right? Okay, if you ask say YangZiJiang can buy, I say wow, too risky, now too high. Okay, if you ask them something drop very low one, very cheap one, then yes, can buy. Okay, so Disney can buy. Okay, Disney. So a lot of people will ask, hey, Disney can buy DIS. Okay, so Disney can buy. Okay, so the thing here is this. Okay, Disney, Estee Lauder. Okay, these are some of the stocks, right? They have been falling and falling and falling and falling. C Limited. Okay, C Limited. You know, what is the lesson here? What is the lesson here? Okay, what are the lessons here that we can learn? Okay, the lesson here we can learn is most people, they like to buy cheap. Okay, cheap. But cheap, right, is not the reason you make money. Cheap is not the reason you make money. The reason you make money is this. Okay, the reason for you, okay, the why you make money. So why you make money in the market? Why the market want to pay you? Why? Okay, why the market want to pay you money? Want to give you a lot of money? Why the market want to give you a lot of money? Can you explain? Because I got patient. I say many people also got patient. They wait and wait and wait for many years. Also cannot make money. But why the market want to pay you money? Why? The market pay you money, right? For two things. One is you catch the best stock. The best stocks. Okay? You happen to catch the best stock in the market. Okay? So example, if today you only have one stock in Singapore and that stock is YangZiJiang, then you are making money. Okay? Other people, they got other stocks, then they lose money. So you deserve to make money. Why? Because you happen to stand at the right place. You stand on this stock. You are standing on the shoulder of the uptrend giant. You understand? Okay. So if you happen to make money in US, maybe because you stand on this Celsius, maybe you stand on this AppLovin. Okay. Maybe you are on this, TDS. Maybe you're on this TSET. Okay. Maybe you're on this Upwork. So you understand what I mean? Because these are some of the stocks that is moving. Okay, that some of the stocks is moving. So the thing is, the reason, right, why you make money in the market is because you get paid holding the best stock. So this one is in my book. Okay, one of the chapter is called get paid holding the best stock. Okay, so the second reason why the market pay you, right? Right, and sometimes if you can do this, the market pay you well. Okay, is what we call risk management. Risk management. So the reason, right, why people don't take risk, you know why? Because they cannot manage the risk. Okay, they cannot digest. Okay, they don't have a risk management strategy. Okay, they don't have a risk management strategy. So if you don't have a risk management strategy, right, you don't know what is the market direction, like this one. Okay, what happened? What happened? Like this. Okay, a lot of people they do this. A lot of people do this. They always like to buy when the stock is very low, very cheap. Okay, they say nothing wrong. Okay, actually nothing wrong. If you buy bank stock, Singapore bank only, nothing wrong. Okay, but but if you buy something else other than the Singapore bank, then sometimes got problem. Okay, sometimes you got problem. Okay, so what is the problem? The problem is here. Okay, let's say now the market is very good. Okay, so let's say the market got 1,000 shares. Okay, so what do? Okay, here got 900, here got 100. Okay, so if you buy the stock that is very cheap, you will buy the stock that is very cheap. Buy the stock very cheap. So while the other stock 900 stock go up, you buy the stock that never go up. Agree or not? Then then you sian, right? You tired. I say okay, market not good, economy not good. Okay, the one that go up very risky. So I stick to the stock that is here. Okay, so example, if you put on stage 4, if you put on the US market, if you rank it up, okay, some of these stocks like AMD, like Disney, like Nike, okay, so these are some of the stocks that is actually the worst in the market. They're actually the worst in the market. Okay, so a lot of people have, yes, a lot of people have PayPal. Okay, these are some of the worst. So there's the reason why, because the market already moved up, but the stock still lousy. Okay, so that's the thing. Okay, so imagine, okay, now the market is very bad. Now the market is very bad. So the 900 stocks, right? Okay, is here. 900. The 100 is here. So 100 is very good. 900 is here. Which one you buy? You buy the 100 or you buy the 900? Which one? Which one? Of course, I buy the 100 lah. So no matter what, right, we want to stand at the right place. We want to stand at the right place. We want to stand at the stage 2. You understand or not? No matter what, if the market is very bad, we stand at the stage 2. If the market is very good, we also stand at the stage 2. Okay? So that is to manage your risk. Manage your risk. Okay? So imagine, some people they like driving. Okay, they're driving. So let's say this is a car. Okay? So let me draw a car for you. Okay. So people drive. Okay. If you drive, right, like 50 kilometer per hour, is it dangerous or not? Is it dangerous or not? Or is it pretty safe on an expressway? 50 kilometer per hour. It should be very safe, right? Okay. But if you drive opposite direction, okay, 50 kilometer, right, can be very dangerous. Because if you drive at the opposite direction, you keep on buying when all the stocks, right, is falling. You keep on buying when all the stocks, is turning against you. Okay, you're not sure whether you are wrong or the market is, falling. Okay, so a lot of people they go 50 kilometer per hour, then that is the problem. Okay, that's the problem. They try to play safe, and then they buy the stock that is the worst one. Okay, but if you think about the other side, if you on the other side you drive 50 kilometer per hour on the expressway, you are, like what we call driving on the right direction. Like example, Malaysia right now. Okay, so Malaysia right now, right, is a bullish market. It's a bullish market. So if you look at the stage 2, okay, if you look at the KLSE, okay, so you look at right now, okay, right now, you look at some of these stocks, right, some of these stocks, like example, this YTL Power, YTL Power. It's crazy, right? It's crazy. Okay, so you can see the stocks from 70 cents go to 80 cents, go to 90 cents, go to $1, go to 120, 130, 140, 150, 160, 170, 180, $2, $2.10. Right, 2.10. So when you like drive the right direction, and the road, right, is very clear, the road is very big, no cars, no cars, you drive 100 km per hour, correct? You can buy more shares, you can buy with more of your money, right? 100% of your money, okay, on a bullish market. Is that a problem? No problem, because every stock is going up, so no problem, okay? But okay, if you say that, okay, I want to go 150, can or not? 150 km per hour, if no cars, if the road is straight, all the cars is driving this speed, right? Okay, no problem, no cars, right? You understand? So the thing here is, most people, they always take the safer route. Why? Why? Because they don't have a risk management strategy. They don't know the market is going down right now, or the market is bullish right now, or they don't know what is the best stock right now. Okay, so for us, we choose the best stock right now, provided we know that right now the market is good. And right now the market is good. So we want to maximize our profit. We try to stick to the best stock right now. Understand? So I would say that, if you already have a job, okay, playing safe in the investment, okay, playing safe in investment, unless you want to, like, retire at the the stipulated age now, okay. But if you want to retire earlier, okay,